Our next decision is something called the further processing decision. It doesn't have to be, but normally when we look at a further processing decision, it comes out of the back of our joint products and byproducts area. So it tends to be related to joint products. And the fun is simply this. We have our joint process. You may remember this from our previous study when we talked about joint products and byproducts. And what we have are units arising from that process. Shall we call them what? Joint product 1 and joint product 2? The issue is that we have the choice. We can either sell the joint products at that point, or what we could do is put those joint products through a further process and then sell them at a higher price because they are further refined. Refined product 1 and refined product 2. So the issue that we have here is very straightforward. Our choice. We either sell at this point here. Now, this point is called the separation or split-off point, the point at which they arise from a joint process. The reason why they're called the separation or split-off point is, if you remember, in a joint process we cannot identify the costs accurately between the two products. Only can we identify them accurately when they separate or split off. So we can sell at the separation point, or we can sell after further processing. Now, which costs are relevant to this decision? Well, the first thing we have to identify is that any costs associated with the joint process are not relevant. The reason why these costs here are not relevant are because they will be incurred regardless of whether we sell at the split-off or separation point or we further process. They will always be the same. As such, we only want to look at the things that change. And as a result of that, the two costs that we're looking at are firstly the idea that if you sell at the split-off point, you will sell at one price. If you sell after further processing, you will sell at another price. We would expect, after further processing, for the refined product to sell at a higher price. Therefore, if we're looking at the relevant costs, the costs that we're interested in, we could identify the incremental revenue. Simply the difference between what we could sell it at the separation point and the higher value that we could sell at after further processing. But hold on a moment, that's not the whole story. In order to be able to sell at the refined product stage, we are incurring costs in the further process. So, when we look at the relevant costs, we look at the incremental or additional revenues and the incremental or additional costs. Now, of course, the incremental or additional costs are likely to have a variable element, but they may well have a fixed element as well. When we deal with the question, what I like to do is to analyse bit by bit. First of all, see whether the incremental revenues can cover the variable cost. Then see whether they cover the fixed cost, and so on.